Hi everyone, welcome back to CoinBundle Conversations in partnership with Tuesday Capital, where we invite some of the leading investors and entrepreneurs in the blockchain space to tell you about their stories and how they invest in cryptocurrencies so that you can learn from them and also invest responsibly. Today I'm really excited to welcome Brett Gibson, who's a successful serial entrepreneur and now a partner at Initialized Capital, which is one of the leading investors in the blockchain and cryptocurrency space, also an investor in CoinBundle. Brett, thanks for joining us.
Yeah, thanks a lot for having me.
Great. So Brett, we want to start with learning about your journey a little bit. So you started your first company when you were very young. You were only a year or so out of college. So tell us about that. How did you know you wanted to start a company and how did you start it?
I kind of defaulted into it more than anything else. I got a degree in philosophy and ended up working in a pizza place out of college. And I just kind of got lucky. One of my friends that was working in a software startup and recommended me for the job. And I was kind of teaching myself programming, and I sufficiently convinced them that I could learn to do what they needed, while working there. And I worked for that company for about a year and a half, and it was just kind of going sideways. Okay. So a few of us left and started sort of a hybrid consultancy / startup out of my friend Sasha's basement. So that's how I ended up there.
That's great, and that had a wonderful name, the Occasional Good Idea Company.
Yeah, Occasional Good Idea. Yeah, it was just that was, I don't know. That was one of my co-founders. That was what he claimed he brought to the table in various contexts. Was
so he was
Occasional
the
Good Idea.
Programmer.
Yeah. No, he was a programmer. He was actually a very good programmer, but that was just kind of his thing. So that's what we named it.
That's awesome. And so, what did the company make, and what was some of the interesting products?
Yeah. So I mean, the main thing we made was this as a product was a site called Draw Here. It was a bookmarklet, if you remember bookmarklets when they're widespread, that let you graffiti on top of a website. So you would click the bookmarklet, and then it would give you a drawing palette, and anyone else who clicked it would see the same image. So it was this persisted drawing on as you went around the web. It was kind of we were just it was right when SVG was being added to browsers, so it was kind of, you had to have it worked weird VML and IE or we were waiting patiently for Firefox 1.5 to be released to support it. So
that's awesome. And then you also sold that company really soon.
Yeah, it ended up going to DeviantArt. They were just kind of they thought it was a fascinating idea. I don't know, we didn't have much of a business model or anything for it, but they the team was more of an acqui-hire. And my co-founders are still working at DeviantArt today.
So that must be amazing. So you must have been 25, 26 at this time?
Yeah. That's right.
Wow, so that's an amazing journey. So then after that, very soon after that, you started your second company. So tell us about that.
Yeah, I kind of did software consulting off and on for a couple of years, and I kept, I wanted to start a new company. I applied to Y Combinator a few times, kind of with more, they were probably right in rejecting me in that as much as that, as soon as I was rejected, the company fizzled and there wasn't really a thing there, right? And then eventually I synced up with one of my good friends from childhood, and we started Slinkset, and we were going to do it regardless, and that got into YC. And so we were part of the YC08 Boston batch in Boston.
Oh, the original.
Well, it's not the original. So the original was 05, but we were the last one where they actually took place in Boston.
Oh.
Yeah.
And then so from Slinkset, you joined hands with Posterous, and you grew that that had tens of thousands, if not hundreds of thousands of users.
Yeah. So Slinkset was, we were doing okay, but it was. We didn't have much of a business model. It was right after the crash in 08. We had trouble fundraising, and so we just folded the company into Posterous, and that's when I joined up first with Gary Tan and started working there.
And then Posterous then got acquired by Twitter as well.
Yeah, I'd left by that time, but Posterous eventually we did a couple. After we joined, we did a large Series A, and then they did a bigger Series B, and eventually Twitter acquired.
That's awesome. So now you've had two of your companies gone through acquisitions. Then you decide to join Y Combinator. Tell us about that, and what did you do there?
Yeah. So I mean, but between then and that was Posthaven. When Twitter was shutting down, Posture Scary and I got back together and started a new blog platform to let people migrate over. It's kind of a labor of love. So in as much as we don't plan to actually ever have any sort of liquidity event. And so I was working with Gary again, and he was working at YC. And around that time is when Paul Graham left, and they were hiring. So he, recommended that I join. And so I joined in, I guess, spring of 2014. And most of what I did was, like, all of the internal tools to run Y Combinator were written by Paul Graham and part of the Hacker News code base.
Okay.
And so I ported those out into their own applications. So I wrote, the application system, the company tracking backend, the voting mechanism, and like how the partnership sort of works through the applications that comes in and figures out who they're going to interview, like organizing the interviews, stuff like that. Yeah.
And as someone who's gone through Y Combinator, it's like the whole infrastructure of the whole system and ecosystem basically runs on that system, and it just makes everything so convenient.
Yeah. Well, it's like it would be almost impossible otherwise without some sort of software background. I think that's the sort of an insight that Paul had, because it's they get so many applications. I mean, when you tell people, like, I think he used to joke, when you tell people that you'll give them money if they fill out a form on the internet, you get a lot of people filling out the form. And so YC's commitment to get back to everybody who's filled out the form with some sort of definitive decision and incentives to find the best ones out of the bunch, like it becomes a bit of a software problem to get a sufficient review of all the applications and like meaningful review of all of them.
Yeah. So that was, I guess, your first transition from being a serial entrepreneur to being more on kind of like the investor incubator side. How was that transition like? Did you like it? What made you make it?
Yeah, it was interesting. I mean, it was definitely, you kind of, there's like a little bit of a sense of like, this is how the sausage is made, when you switch sides. But yeah, I liked it. I liked being around a lot more founders. It's energizing to deal with a bunch of young, or not necessarily young, but early on in their journey founders. So yeah, it was great.
That's great. And so then you've been at Y Combinator. You've probably met like hundreds, if not thousands, of interesting companies. How did you decide to then say, I'm going to be a full-time investor and join Initialized?
Again, a little bit circuitous. Gary and I both left YC at the same time. I don't know that either of us had specific plans when we left, but soon after we did, he went on to raise Initialized fund, our most recent fund, Fund 3. And I spent the year researching and kind of learning a lot of like computer science stuff that I had done, a lot of cryptography, and at the end of the year, and I also worked on Posthaven. We had a bunch of updates we'd promised, and I'd lost track of working at YC, and then when I was done with that, I was just trying to figure out what I wanted to do next, and Gary just sold me on joining up at Initialized.
Great. So now you're at Initialized, you're probably getting like, dozens of pitches thrown at you all the time. What's kind of your investment approach at Initialized? How do you filter through all of the companies that are coming to you?
Yeah. I mean, it's tough because one thing about Initialized is that we're as a larger seed fund. I mean, seed means something very different from what it did when I was fundraising. These are kind of what I would call like Series A size deals. So effectively, we're writing fewer larger checks than say the Initialized first couple funds when they were doing follow-on just for YC companies. Sadly, we do look a lot more. We don't always get to work with all the founders that we'd want to in this context. I think I personally am a little bit founder first in my evaluation. I get energized with founders, so I think working hard and smart and that are straightforward and to talk to. But we do a lot of analysis also around market size and where we think the market's going to be and how big a company can grow, just sort of necessarily based on the deal flow we're seeing.
Yeah, so what advice would you have to companies that are started by maybe people in the audience that want to maybe pitch to you or Initialize?
I mean, I think the first thing is build something, because it's like, I mean, it may be more of a hurdle for like for YC, but or pre-seed, but like a lot of people never build anything, right? So just getting your hands dirty and build, like we have a given the composition of the team, we have a bit of a bias for builders, being a bunch of builders ourselves. So it's always good to get something to market, and then from there it's just like. I mean, there's a lot of advice out there on like sort of triangulating product market fit, and most of it is actually talking to people, actually understanding the need and the use case, getting the feedback you need to understand whether or not people want this and want to pay for it. And that, I mean, some of that's informed from my own journey as a founder, because I think that was at my first couple companies. It's something I didn't do a great job of. There was a little bit of, this is interesting to work on. This is cool. Like people are, enthusiastic about it, but we didn't necessarily exercise. Is there a business model here? Right. Is like what? How can this company grow? Because especially Initialized, being in venture, like we need high growth startups. It's like something. There's a lot of good businesses that aren't, venture hackable, and it becomes this cliche and this thing that you kind of push back on venture capitalists about. They're looking for 100x return. And it's like, I mean, that's just kind of that's how the fund is modeled, and that's how the industry sort of has to work for us to be an asset class that's interesting to the people we're taking money from.
Yeah, that makes sense. So it has to have the potential to being huge. Otherwise, you shouldn't raise venture capital. Great. And what advice do you have for people who want to become venture capitalists like you? Like, do you have to be a founder? Do you have to, can you go into
I don't know. That's a good one. I mean, it wasn't something I specifically targeted in my career, or I mean, what the advice is pay attention to your network and pay attention to relationships. The earlier the better, because that's what comes in. It's something I sort of didn't as a programmer, often working from home wasn't the first priority for a lot of my career, and so it's definitely a relationship driven business. So go out and meet people, and unfortunately, like you learn. Like I might have been a little dismissive, but fortunately I've learned since I've done this, like the people in these communities are really interesting. Like they're like people you want to talk to.
Great. So previously you thought like I don't want to deal with venture capitalists. That's interesting. Great. So now transitioning a little bit over to blockchain, you mentioned in your year off you spent a lot of time learning about it. When did you first start getting interested in this space, and what kind of lit the light bulb for you?
Yeah. So I would say that I first purchased some Bitcoin. It was probably like 2013, and it was more like, hey, this is it's a YC company. This could be interesting. Like I saw Coinbase, so I was like, might as well put some tiny amount of money into it. So I'd heard about it before that. I forget where. I don't know if it was like a podcast or something, but and the idea was interesting, and I didn't know exactly kind of what to make of it. It seemed like it could be viable. I don't know. I certainly wasn't predicting anything near the run up of 2017. And then slowly I think I bought some other coins and sort of got interested a little while in 2013, 2014. Sort of bought some of the altcoins that all seem to be gone now, the first generation. And then I kind of kept my eye on Ethereum. I think at one point while I was sort of researching, Gary asked me, he's like, hey, what do you think about? He was getting more excited about the Ethereum project. I think they were participating in the pre-sale. I was like, what are the possibilities here about like integrating and or running Posthaven on Ethereum? Oh, interesting. And I researched for a while and kind of came back emphatically like, no, that's not a viable thing. Yeah, it makes sense. But it did get me more interested in sort of researching what was going on, and at the same time I was learning some more about the cryptographic primitives involved, and in terms of like how public key cryptography and hashing functions work. So And then when I joined Initialized, between myself and my partner Vince, who had the most recent experience in engineering, it just seemed that the deals with more technical diligence got routed to us, and so we ended up being the ones reading white papers. And, and I think, I mean, it seems like a pretty common story that like once people, it's something that people kind of rattles around their head, and then once you start researching it, it's like once people dive in, like becoming some sort of believer, like it seems to be fairly common. I don't know.
Yeah, no, absolutely. We've heard that thread over and over again, that you start going down the rabbit hole and then emerge a believer on the other side. And so now at Initialized, you get, everyone sees there's so many ICOs, so many projects in the space. What's your criteria for picking out projects to invest in?
So there's I would say that at the firm we have some sort of, we have kind of a variance of theses around like what's going on in the space, what's interesting. The first thing, independent of that, is that we still are a early stage investment firm. We like to partner with people who are just starting out and building something, and be there to help them build. We have like a heavy services model, come out of the YC ethos of a lot of like office hours and a lot of interaction with our founders. So even in our crypto deals, we're still looking for that same sort of shape deal, and they're probably going to be, at least today, a little more expensive if they're in cryptocurrency. But we're still looking for people who are just starting out that we can partner with and actually help, be a value add, whether it be in or advising or what we can do with product and marketing.
So when you like evaluate a company in the blockchain space, do you evaluate them the same way you would have done?
Yeah. So it seems the space is a little weird in that a lot of the major investors have multiple funds or funds with more complex models that give them a lot more optionality in terms of types of deals.
Right.
It's not as in traditional venture you have it's easier to kind of label what size deals each firm does, right? Like when you're in early stage, there's there's growth firms. In crypto, it seems like there's a lot of firms that are just doing all of them and or like have multiple funds to give them. So those firms are just just chasing any deal that they can see, because there's probably if they like it, whatever stage it might be at, it might fit it into their portfolio somewhere. But for us, a lot of things, they seem pretty interesting, and even if they seem relatively new, they're like, we look at the numbers involved and the sizing and like how it might fit into an early stage portfolio. It just kind of doesn't make sense, even though it's like a pre-launch thing. It's kind of a Series B or growth-ish size deal. So that's one of our first. Beyond that, I think we're looking for the same thing. We're looking for in the rest of our portfolio, which are founders we like, that are hardworking, that seem to understand something other people don't, and are working on something that has a lot of growth potential.
Yeah, and that's really interesting to hear, because as professional investors, you put in a lot of effort understanding the team, the founders. Whereas one of the challenges our viewers have is there's a lot of ICOs and random projects where people take the same type of risk venture capital does, but without the learning and effort that you put in.
So that's probably true. It's not. A lot of these, these projects are very high risk reward, right? They're not. It's kind of a weird thing in that in the crypto space, like there may be a higher chance that this is not going to be worth anything. But then the upside is even less bounded, if you see what's happened in a recent run up in other tokens. So like if you're proposing a new token and you think it's actually going to take over, if you think, there's still people that are proposing things they think have a chance to take over from Bitcoin as like the store of value. And if you really believe that, then the potential return multiples.
It's huge. Great. So what about the different use cases of the blockchain? So you're very embedded in the system. You look at deals. Do you think there's certain use cases where projects are more likely to be successful versus others?
Yeah. So personally, I think we're still very much in a early infrastructure. Okay. So I'm much more interested in layer one stuff. And or sort of picks and shovels businesses that are kind of built around that we're going to need regardless of what happens on the correct layer one chain, just to integrate with the real world.
Can you explain what you mean by layer one?
So yeah, I mean layer one is like the fundamental distributed ledger system, like a novel distributed ledger or a blockchain. Like Bitcoin is layer one, as opposed to like Lightning, which is layer two, built on top of Bitcoin. Or you call Ethereum layer one, and most all dApps. I mean, it's a little murkier because there's like very specific layer two analogs like right in on Ethereum. But the distributed app is built on. I think that in terms of like distributed applications, like the underlying infrastructure is kind of molten right now, and like obviously I think. It's hard to argue with anyone who says that for right now, like building for Ethereum is the correct place. But like as a I think we're still in a phase where we're learning both what the underlying blockchain needs to be able to do to support the distributed applications, and what parts of distributed applications really need to be into a blockchain. And I think. And there's kind of a breadth of use cases today. And the other question is, and that has been sort of artificially inserted because of the ICO dynamics, is what needs a token, when what needs to be using a token at all, because you can decentralize a lot of things without tokens. Like there's probably a good case to be made that IPFS is going to be a viable network without token incentives. But so one needs a token at all, and then one needs its own token. I don't know. These are sort of separate.
So, but one of the points you're making, it's still really early on in the ecosystem. We're still building the foundations.
I have a harder time betting on things that are. I think I'm not sure if we landed on the smart contract platform that we're going to land on, or whether or not we're looking down like some years of smart contract platform wars. And so things built on top of them seem it's harder for me to get to super high conviction about their eventual use.
Yeah, that's really interesting.
Yeah, but I mean we that's not, some of my partners differ with me.
That's good. So then, when do you expect? I've heard many people talk about how the new foundations of the internet might be rebuilt on the blockchain. When do you see that happening? Is that something that's 5 years out? That's 10 years out?
I mean, I don't know, and again, I don't know which parts of the internet are like super appropriate for. I mean, I think that. Decentralization is costly, and I think it works. We have this very specific use case of like, uncensorable with like counterparty, without counterparty risk, right? And I think that's useful, and I think that it certainly becomes important in total geopolitical breakdown scenarios and like so, but. What do we need to actually be on a blockchain? I'm not entirely sure. So, but I could certainly things like the attempts to do VPN networks that sort of have some internal token or otherwise incentivized, and that seems interesting to me. I don't know. I don't think we're gonna have 50 independent distributed ledgers. I think there's going to be some handful of use cases on the order of 5 to 10 that make sense, and where something kind of wins out and things are built on top of it. I think that a lot of things will be built in a deeply hybrid way, where most of the application can and probably ought to be centralized, except for the quantum of where there's real really a counterparty risk issue.
That makes sense. And so you've talked about tokens, the need for tokens in some cases and not in others. You also talked about your early investment days directly into cryptocurrencies. Do you still, either personally or through Initialize, invest in tokens, either directly on exchanges or via token sales?
Yeah, I mean, I don't really. Well, so yes, I do hold cryptocurrency.
Yeah.
I don't really get involved in many individual token sales. And now, in fact, it's like now that Initialize can hold tokens, there's rules about what the partners can invest in and what we have to, we don't have any conflict of interest internally. So there's both rules and limits in terms of if these are fund opportunities. But I think in my personal holdings, I don't know. I guess I'd say relative to the staff at Initialize, I'm the Bitcoin maximalist. I think that I really buy. There's an article by John Pfeffer about an institutional investor's take on crypto assets.
Oh, interesting. What does it say?
It's the basic analysis is that there's likely to be one crypto network that captures the use case of non-sovereign monetary store of value or something.
Yeah.
And that one is probably going to be worth the orders of magnitude more than the others, because you just think about it in terms of the equation of exchange and what's going to be happening with capital inflow and outflow, and the network that central banks feel safe allocating capital to as part of their holdings will just be worth a lot more, and that even things like like smart contract platforms where it's more of a payment coin will be worth a lot. They're highly useful and they'll be worth a lot, but because anything that's that's a payment rail is going to have a very high velocity, that the ultimate value of that currency will be lower.
Okay. So in a nutshell, it's basically a Bitcoin or Bitcoin-like currency will dominate a lot of the market capitalization.
Yeah. So we're like in my personal portfolio, it's kind of like, the assumption is that everything else has to beat Bitcoin or whatever I see as the heir apparent to Bitcoin were that to happen. So, and I've heard of other funds actually managing themselves that way, where they hold most of their assets in Bitcoin and then make investments. So because it's, you're hoping for these return multiples that we've seen from some of these ICOs, but at the same time, if you're not beating Bitcoin, you probably should have just bought Bitcoin.
Yeah. And do you think that store of value battle has been won by Bitcoin, or that's also up for grabs?
My hunch is that it has, but I don't think that. I think it's got a very strong lead, I guess is what I would say. I think that usage relative to what usage really could be is still so low that it's hard to call it a winner.
Yeah.
But my bet's on Bitcoin for the time being.
That's great. And is that what you would advise someone who's never invested before to get started with as well?
If you've never invested, and I would advise that you allocate and you have extra. I mean, just from a standard portfolio management, if you have. You have capital to invest. I would probably do some very small percentage of your total holdings in crypto assets, and I would probably make most of that percentage Bitcoin and Ethereum, and maybe I'm also kind of bullish on one of the privacy coins.
Can you share which one?
Which one? I mean, I don't know which one.
Okay.
Monero or Zcash.
Okay. Great. No, this is really useful advice, because I think one of the problem new investors have is they just get thrown overloaded with information from these 4,000 different coins and all of the hype surrounding them. So it's important for people to go back to basics and evaluate these opportunities just like they would when they're buying a car or a house or a stock.
Yeah, I mean, I think that because those of the four things I've mentioned, those are the ones that are actually fulfilling a use case today. I think that Bitcoin is working to be, it's still pretty volatile as a store of value, right?
Yeah.
So it's tough, but it's definitely functional in that use case. And Ethereum is certainly at least functional for the ICO use case, which seems like another thing that falls within the counterparty risk bucket and is real. And then obviously private transactions are a real thing too. So
that's great. Would you have any excitement announcements or something coming out of Initialized that you want to tell people about?
Nothing announced today.
Anything else that you wanted to talk about that we haven't spoken about?
No, I don't think so.
Okay, great.
That covers what we were hoping to talk about.
No, that was great. Well, Brett, thank you so much for your time. This has been really valuable and informative for our users who are new to the space and can learn from your experience. And also, if anyone is starting a company, I would highly recommend Initialize. It's one of the best firms in Silicon Valley, and they really help you build a product as we learn from our experience. So thanks for joining us, Brett.
Thanks a lot.